Thanks so much for joining us today. I'm Marlon Bowling with you, your tour guide to the ag commodities. Well, we had quite a day yesterday. I have to admit, I've been doing this for a long time, and I have never seen market action like what we saw yesterday. I want to bring on Brian Hoops of Midwest Market Solutions and talk about what we actually experienced yesterday. Brian, that was something to behold. I don't know if you've ever come across market moves quite like that yesterday, but man, oh man, that was something. Now, we'll talk about that here in just a second. I want to review what happened overnight. And we had the markets very mixed heading into the close yesterday. So just to get a feel for what was going on here in the overnight session, it looks like we had May corn down 6 1/4 at 7.46 3/4. Now, it flirted with going higher early on last night and couldn't hang on to that, and it drifted lower. Now, keep in mind, we have the WASDE report coming out at noon Eastern time today. We had December corn down 3 1/4 cents yesterday, or last night, I should say, at 6.40 per bushel. Now, with our quotes provided by Bar Chart, we had the May soybeans now 8 1/4 higher overnight. They were at 16.98. They had gotten up way over $17 at 17.34 and settled below $17 by the time we wrapped up that overnight trade. So extreme volatility there at about a $0.5 trading range. In the November contract, wow, look at that. We were only 3/4 cent higher at 14.74. Now, on the wheat market overnight, that's the one that had all the craziness yesterday. And in Chicago, that May wheat, it tried to get ahead of steam behind it last night, and it didn't quite work too well. So we ended up with the May 57.5 cents lower at 12.29 per bushel. Had a high of 12.85. Meanwhile, in the hard red wheat last night on the Kansas City market, you had the May contract 50 1/4 lower at 11.49 1/4. And if you look at the Minneapolis wheat last night, here you had the May contract 38 1/4 lower at 11.05 3/4. So follow through selling last night in the wheat after it looked like maybe there was going to be a run of buying after hitting limit down yesterday. Now, we did get some overnight export sales business, and I just posted this from USDA. A little unusual. We had 100,000 tons of corn that was sold to Colombia, and then we had 20,000 tons of soybean oil that was sold to unknown destinations overnight. So that's a little bit of a nice surprise. No mention of soybeans overnight. Brian, what do you think about that particular sale announcement? Is that of any concern that soybeans weren't in there?
Hey, good morning, Marlon. We've had a really active last several weeks of soybean sales, and maybe starting to slow down just a little bit as South American supplies have kind of moderated because of the rainfall that they've received. So I don't think it's a real big concern. The corn market making a sale, that's great to see. We finally get a corn sale. We need to see more of those. And when you were talking about wheat, here's an interesting stat that I found, that the other night's range was over $1.60 a bushel for the wheat market. That's just in one night. In fact, from 2015 to 2020, we didn't trade the entire annual range that much for wheat. So the entire year, we didn't even trade $1.60 range from high to low, let alone do it in one night. The volatility is extreme right now. Margin requirements are increasing, and that will start to shrink our open interest levels just a little bit. So it's unprecedented volatile times at this point. And we look ahead to today's supply and demand report. We're starting to see the wheat market weaken, as I expect to see a little bit of a negative report today. The corn market probably going to be neutral, but with the wheat market turning lower, it could pull the corn market down. And then you have the soybean market that has been rallying off of export sales, and looking ahead to today's report, expecting it to be somewhat of a bullish report.
All right, Brian, I wanted to take a closer look at what we experienced yesterday. And you and I know we're both watching this in real time. And what we have here, this is a minute-by-minute chart yesterday of Chicago May wheat. And remember, yesterday we got into the noon hour, and it was down here pushing limit down. The new expanded limit at $1.30 lower. It was just getting crushed. Didn't even trade for a while. And then we got to 12:25 p.m. and it started to take hold. We got a little bit of a rally, and it started to gain momentum, and it went up, just a little hiccup right about here. went right on up. And by the time we got to 12:43, this is 18 minutes later, we had gone from 11.64 to 13.56 and 3/4 in 18 minutes. Then it ran out of gas right here, and they hit the air brakes and skidded all the way down. And this is in 4 minutes time. We went from 13.56 and 3/4 all the way down to 12.51 and 1/4 in 4 minutes. I've never seen anything like it, Brian. Are we done with volatility like this? Did they finally flush everything out with these wider limits? Or can we expect more like this?
I think you have not flushed all the volatility away, but we may seen the max volatility that we're going to see. That was extreme movement yesterday. We went from limit down to about 56 cents higher at one point, and that was coming on a headline news that Vladimir Putin had decided they would not export any products, including ag products, out of the country until December the 31st. So it was kind of a knee-jerk reaction off of this news item. But then the market kind of settled back and turned lower overnight again, as we had, really not expected Russia would be exporting much anyway. So it wasn't really a lot of fresh news, but certainly a knee-jerk reaction caused a huge spike in prices. And so producers can really get whipsawed in this type of trade. So if you're a producer, long-term hedges, options in place can remove some of that volatility and some of that emotional type trading that we are seeing in this wheat market.
And yesterday, if you look at the overall range of that May Chicago wheat, it had a range of $1.99.5. Just a couple of ticks away from the $2 range. Just insanity. Okay, Brian, we'll come back in a moment. We'll talk about what to expect in our livestock trade today next. So let's review how we finished up in our livestock trade yesterday. On the live cattle, with the volatility in the grains, we managed to close higher. April live cattle were up $1.15, June up $1.52 yesterday. On the feeder cattle side, we finished up with April 65 cents higher at $160.32. The other deferred months beyond that were over $1 higher. Lean hogs came back to have April up $2.65 on the close. May was up $3.15. And the gains got even bigger if you went beyond that. So with that in mind, Brian, what do you expect to see in our livestock trade here today?
Yeah, I think you're going to see a little bit more follow-through strength in the front month cattle. Stock market is seeing a huge rally today with lower corn prices. That should be supportive to higher feeder cattle prices. Hogs on fire yesterday as well, on some short covering. So I'd be looking for a little bit more strength in this cattle market, a little bit of bids coming in at 138. So there was some lighter trade, but I think it's just really not enough to really make this market, and cash could strengthen as we go into the weekend.
Alrighty, and just wanted to touch on the West Texas Intermediate crude overnight. This is interesting. It went down $6.78, quoted at 116.92 this morning. All kinds of volatility in that market too, needless to say. Brian, thank you for helping us navigate into the open here today. Brian Hoops of Midwest Market Solutions. Oh my gosh, Janet, it's going to be another busy day, so I'll turn it back to you.